Hey all, welcome to ShareTreck. Today is the 4th of March 2022 and it happens to be a Friday. Really excited with my new computer. It's got 32 GBs of RAM, it's an i7 and it's got a dedicated GPU. So I couldn't have asked for better, and I also have a 4K camera now. I thought let's do it all at once, get everything set up properly so that going forward, we don't have to worry about the technology. We just keep on recording. Also, I've changed my editing software. So things are going to look a little different for a little while, and then it'll stabilize, and I promise no more changes after that. Also, I made a decision based on subscriber feedback that this channel is going to be purely CRISPR channel. I have created a separate channel for my crypto interests, crypto and gold. It's called as ShareTreck Crypto Channel. I'll put a link in the description below. If you like it, you could go and have a look, and you could probably subscribe there. It also has daily updates, but it's on CRISPR and CRISPR related information, as well as about gold. So these are things that are happening in the other channel. But out here, we're going to be fully focused on CRISPR. So what's in the video for today? So today's video is going to consist of, as usual, the news articles first, and also my opinions about what's happening in the market and what's going to happen next. We're going to do, after that, a technical analysis of VXN and Nasdaq, followed by technical analysis of all our shares in the biotech sector that we track, and look at potential movements for them today in terms of price movements, where they're going to go today. So that's about it. Let's get started. So I'm going to show you two clips, both from the same channel, just to highlight how difficult it is within small channels like ours to make predictions about the market, because here we are going to see a channel which has got two opinions being shown on the same day. One opinion is that only schmucks buy growth stocks right now and are stuck with it, and the other opinion, like intelligent investors, are going to buy growth stocks in order to balance their portfolio. So you see both of that, and then we'll talk on the other side.
And then there were none. I am talking about the endless slaughter of the great growth stocks of this era, something that dragged down the averages, Dow slipping 97 points, S&P declining 0.53%. But the Nasdaq, yes, where the great growth stocks live, doubled 1.56%. This is an unkind market. Today it chose to once again lay to waste the stocks that sell at a very high price to sales multiples. And we got to go over the genesis of this move, because it's very stark and it's causing many people huge losses. And for many people who want to own these supercharged growth stocks at super high prices, this could be your denouement. I don't want that to happen. First, let me back up and use this twilight of the high-flying idols moment to explain the way big money thinks versus the way that small money thinks, because they are two very different animals. While this market has strong sectors like oil, which we'll be going over at length closely at tomorrow's 12:30 Investing Club meeting, or healthcare or transports, it also has another cohort, and it's the now hated, formerly loved, supercharged go-go stocks that trade on the price to sales multiples, because the earnings are either non-existent or negligible. Oh, that last cohort is under siege right now like I haven't seen it in years. You might wonder, with so many stocks that are cheap after the blasting this market has endured, who would still hold out and stay with these beaten down, unprofitable names? The answer, either money managers that are under no pressure to perform anytime soon, so they can afford to make long-term bets like Cathie Wood and her ARK funds, or uninformed individual investors who got into these stocks during the pandemic, initially made big money, and are now hanging on by their fingernails. I don't think they'll be able to hold on much longer.
So as you saw in the clip before, basically, in one stroke, Jim Cramer bought down Cathie Woods and equated her to uninformed investors. And basically, people who are holding growth stocks are schmucks right now. And in the same breath, he went on to say that, hold on to whatever you have got. I don't want you to lose money. So it's neither here nor there. And now in the next clip, you're going to look at institutional investor giving an interview, and she's going to say that she's getting into growth stocks because that's one of the things that she needs to balance her portfolio. So it's both ways. Check that out next.
In terms of just overall, are you a net buyer or a net seller here?
Yeah, I am shifting my portfolio, actually. So for the last year and a half, you and I have talked about a lot how I've been more cyclical, more value-oriented. And now I'm trying to get a little bit more balanced because, of these uncertainties. So I want to have that barbell approach where I still want to have some cyclicals, some reopen names, and some value companies. But I also want to find some growth companies, too, especially on the technology side and in healthcare as well. In technology, I've been underweight for a very long time, both technology and comm services. And so on the margin, on the weakness, I've been adding. I've been adding to Apple. I've been adding to Facebook. I've been adding to Broadcom, which had a wonderful quarter last night where they beat and they raised, and they still have $7 billion that they're going to use to buy back stock. Healthcare, I love Zoetis. It's expensive, though, right? So I'm very careful. But it's also down 20% on the year. And animal health is a $50 billion market. So I'm trying to just balance out the portfolio a little bit more and looking for opportunities.
All the noises, and we have to apply our own minds, look at our own balance sheets and our staying power and see how much money we can afford, how long can we afford to stay and hold on. Because at the end of the day, if you look at it from a purely financial perspective, Kramer is right, because you need to have a good rate of return. So let us say you have a great CRISPR growth stock and you have invested in it and you're holding it for the last 5 years. You have put $10,000 in there. Even if it multiplies and becomes $20,000, if you had been in other opportunities while it was down, you would have made more money and you could still have had an opportunity to get back into CRISPR and ride the wave back. So the big institution, as he calls smart money or the big money, that thinking has got more avenues at their disposal. They can move money into bonds, they can move it into a different country in a different sector, or they can put it into gold, or they can do a whole lot of things that a retail investor like us cannot do. So for us, if we are in this predicament right now, that is to be understood as inevitable, because whatever you see, even the ticker that we see on the stock exchange, which is giving us quotes, it's not exact quote that is happening right now. It's slightly delayed, and the guys who are able to see the latest up-to-date ticker are the ones who are paying big money. These are the big institutional investors. So as it is, the dice are stacked against us. But as retail investors, if we were smart in reading up on all the news articles, not selling on rumors, and not succumbing to fear of missing out, and holding on to our investments where we have great conviction, eventually we are going to make money. The only difference between us and the big money folks is going to be that we may probably not make the same rate of return as they do. We might be having slightly less, but the returns will come in the due course. Like if you look at Nasdaq or Dow Jones or any index anywhere in the world, it's never always down. It's down and then it goes up, then it comes down and then it goes up. So all we have to remember is that when the market is up, that's the time for us to sell. And if we fail to sell out there, then we'll be on the roller coaster on the way back again. So that's my 2 cents on what is to be done with regard to investment. Now let's get on with our news for the day. Okay, let's get started with the VXN. So that's the good news and bad news out here. The good news is that we have possibly managed to find a trend line that VXN is following. So that's the good news. Because this trend line has supported once, twice, thrice, 4, 5, 6, 7, 8 times so far. So that's the good news, that at least we know what is happening. The bad news is that unfortunately this means that VIX is going to keep on escalating upwards, which is going to be detrimental for Nasdaq. So let's go and look at Nasdaq right now. Nasdaq is looking equally horrible, and our red resistance line seems to have worked again. And unfortunately for us, we have been pushed down. And the yellow line out here is the 9-day EMA, which has now become a constraint for us. Our next support happens to be sitting here at 13,329.77, which is the immediate green horizontal line below. And when we look at this particular green line that I have drawn here, it's kind of sympathetic to, let me move this here. So I'm thinking that if you had this kind of a slope, which was giving support previously, we should potentially expect the same out here if the past performance was supposed to be any guide for the future. So this is just a placeholder. It may or may not hold, but our subsequent support after this is going to be 13,185.70. And if you look at our MACD, it is tending towards the signal line, and that's not good. The momentum is also falling. That's not good for Nasdaq. So let's go and look at the one-day time frame. So if we look at the one-day time frame, there seems to be a slight amount of recovery on its way, but that could as well be a dead cat bounce, because yesterday we suffered severe setback, and today we have opened low. So there must be some segments of the market which feel that how much more can it be beaten? Because typically when the market is going down, the participants are looking for capitulation. Capitulation is the point at which people who have stock and who are able to sell keep on selling, and they reach a fatigue where they don't have any more stocks to sell and their appetite for selling is complete. That is when the demand starts becoming stronger than the supply, and new buyers start buying up, and they are looking forward to the price going up. So new resistance and support lines get formed, and the market changes its complexion. So what we are all looking for in the market now is seller fatigue or capitulation. Once capitulation happens, then you can see a turnaround. So when various market participants start thinking that capitulation has happened, they start buying. However, if capitulation has not happened, the sellers who are still sitting in the margins and who are not yet fatigued will come and sell and push the price down further. So this is the reason why you find a zigzag pattern on the downward journey and similar zigzag pattern on the way up. Something similar could happen right now. It can also be known as a dead cat bounce. So I suspect any improvement that we see today is those kind of optimistic investors who are thinking the bottom has come in and they're buying. So let's not believe that. Let's go ahead and look at what's happening in our biotech sectors. I'm going to sort it as usual, and let us see what it looks like today. Pfizer is at the top at a 0.85% gain. And I'm not going to do analysis for Pfizer. It's a stable, solid company. Intelia is up 0.72%, and it's got support from all the 4 exponential moving averages, which is a good sign that we are still above it. And if you look at our MACD, you can see the histograms are getting lighter and smaller. That's not a good sign. We want them to either stay the same size or start going up. When we look at the momentum, it's above average, but it's not picking up strongly enough. So overall, I would reserve my hopes on Intelia staying green for the rest of the day. But if there's a dead cat bounce mechanism at work, then we may retain some positive developments for the day for Intelia. If you look at Regeneron, again, a very, very anemic gain of 0.36%. We are fallen below the 9-day exponential moving average. That's not a good thing. The next supports are going to be in the 20-day EMA, 50-day EMA, and the 100-day EMA respectively. That is the orange, white, and red line. And you saw in one fell stroke while I was speaking, we just fell below the 20-day exponential moving average. So things are not looking great for Regeneron at this point of time. So if the dead cat bounce doesn't take place, we are going to lose more on Regeneron. CRISPR is up 0.07%. If I was to go to a 1-year time frame, we can see that we are below all the 4 exponential moving averages, and the MACD has turned bearish, and the momentum is flat and below average. That's not good at all. And if you go to the 1 day, again, we can see that the signal line is moving, MACD is moving away from the signal line because the histogram color has become darker and it's become slightly bigger. So that means the distance is going up. We are getting more bearish and the momentum is falling. That's not good for CRISPR. So more losses on the way. Vertex is down minus 0.27%. Same story out here. Our next support is going to be 234.58, which is this red line. It should be green, but I'm not going to bother changing the color right now. In the intraday map, if we go to the 1 year time frame, you can still see that we are struggling with this resistance out here. And once we stay above that, then I will turn this into a support at the end of the day. When we look at the MACD, it's closing the gap between the signal line and going closer in an attempt to turn over to the bullish side. If that happens, that will be good for Vertex. But the momentum is weak and it's tending towards average. So I'm not much encouraged out there. Let's see how it turns out. Bluebird is minus 0.67% down. We have the earnings, which is due today. Let us see what happens with the earnings. Maybe that could turn out to be a catalyst. But given the pessimistic outlook in the market, I wonder what it would take for us to get a boost in Bluebird. We'll wait and watch what happens. The MACD is bearish and the momentum is absolutely weak. So nothing good for Bluebird today. Caribou Biosciences again plumbing new depths, and the earnings which came out on 2nd March has not been updated here. So let me see if we can have any earnings information on the news. I just quickly checked the web to see what's happening with Caribou Biosciences. It seems the marker out here at TradingView platform is probably wrong. One of the things that really bothers me is that when I was doing a Google search for Caribou Biosciences, I couldn't find the website of the company. So I had to go into Business Wire and look at an article where there was an email address for investor relations contact. From there, I picked up the Caribou Biosciences website address and put it into the browser in order to go to their investor web page. And there I did not find anything for Q4 of 2021. So, these companies have to do a little bit more, and they should be more present in the marketplace of the media, and they should be doing more press releases and being out there. It shouldn't be so difficult for somebody to find the website of these companies. So, that's my thoughts. You let me know what you think about it. If any of you are fans of Caribou Biosciences, please put it in the comment below so you can correct my perception about it. So next, let us look at PSEB. PSEB is looking bullish on the MACD. This is on a chart where each of these candles is 1 day. And its momentum, however, is falling down. That's not a good sign. PSEB is down 1.59% today. So if you look at the screen histogram, it kind of shows that the MACD is moving towards a signal line to cross over to the bearish side, because the colors have become lighter and the histogram is becoming smaller. That's how I know that the little amount of bullishness that's there in it is fading away. So there is no hope for PSEB today. Let's go on to Editas, which is down 1.79%. And our next support is going to be out here at 15.37, which is this green line out here. We are being constrained by the 9-day EMA immediately and the 20-day EMA following that. So Editas is looking weak today. Even though the MACD is bullish, it's kind of tending towards a signal line. The same story with others. And the momentum is also weak and continuing to fall. Verve is down 1.94%. Same story out here, just like Editas. Everything is down. And we are below all the exponential moving averages. And it's not looking good again today. ARCG down minus 2.01%. Our next support is going to be 42.62, which is this green horizontal line. The MACD is bearish and tending towards, the MACD is slightly bullish, but it's tending towards being bearish. Momentum is also falling, not looking good for ARCG today. Allogene is down 1.40%. We are at the very end of this pennant, and I'm predicting that it's going to fall down below this, continuing with the downward trend. And MACD is flat, and momentum is almost non-existent. So Allogene is in for a very bad day. Probably lose a few more cents before the end of the day. Right now it's around 10:20 in the morning, so plenty of time to go before market close. Beam is down 2.51%, and our next support is going to be out here at 65.12, which is this green line out here. We are being constrained by the 20-day EMA, followed by the 9-day EMA, the 50-day EMA, and then the 100-day EMA. Our MACD is looking almost bearish. It's almost ready to cross over the signal line and go bearish. Momentum is also falling. Beam not looking good today. Illumina is down minus 2.25%. The support is at 322.88, which is this horizontal line. We are being constrained by the 9-day EMA and the 20-day EMA. MACD, even though it is bullish, is tending towards a signal line, as can be seen from the color in the histogram. And the momentum is also falling. Not looking good for Illumina. That's heavy loss. Novartis is down, but I'm not shedding any tears. It's in a consolidation pattern. If you look at the price movement here, it is range bound, and it will take care of itself. We don't have to worry about Novartis. Teladoc is down minus 2.13%. Even though it's not a genomic stock, we are still following it because it's part of the ARCG component. It's being constrained by the 9-day EMA followed by the 20-day EMA. MACD is turning bearish. Momentum is also falling, not looking good for TDOC. IMTX also down minus 5.39%, the biggest loser today so far. It's down 41 cents. It's on its all-time record of being down. The momentum is further weaker than where it has ever been in its lifetime. So I'm seriously concerned about IMTX. I don't know how much more it's going to fall before people stop selling it. Yeah, that's all I got for today. The final note is that the market fell down heavily yesterday and it's fallen down even more. There is going to be a dead cat bounce coming somewhere around the line. So we should not get pulled in by that. Do not buy at that stage. That's my personal recommendation with my own opinion. Do your own due diligence, of course. This is not financial advice, but my thoughts are that I'm going to wait for at least 2 or 3 consecutive days of upward movement before I start even thinking about buying. So we just sit back and watch what is happening with the market. I'm not even doing dollar cost averaging, just sitting back and let the market proceed. That's all from me for today, my friends. Thanks for your patience. I'm sorry I couldn't post yesterday, but all the gear is ready and running. Please put a like on this video. We are increasing our number of subscribers. We have gone beyond 180. Thank you for all the new subscribers and the existing ones for staying with us. And also please check out my crypto channel, which is separate. I'll put the link out here. And if you like, you could subscribe there and I'll see you there for a daily crypto uptake. Thanks and have a great day. Bye for now.